Biden's going to have a couple of nominations. What I don't understand, Danny, is how the Fed is supposed to play a more active role in climate change when they really have two mandates, and they're not really responsible for the types of jobs that are being created. And some of the commentary that's being used, the decision the Fed makes on our behalf should build toward a stronger economy with more jobs in innovative industries, not prop up and enrich dying ones. I have no freaking clue what that has to do with the Fed or its mandates. That is purely a fiscal and more private sector response. So I don't even understand how the Fed is supposed to be responsible. And I heard Jay Powell mention a little bit about climate change in his language, but I still don't understand how that connects. I would love to see Michael write a piece on that because I don't get it.
Yeah, we've heard Janet Yellen already go down that road in the sense of talking about all the different industries that maybe are obsolete at this point that are still here and provide lots of jobs for people.
Can you imagine somebody watching that on television in one of those obsolete industries? Hey, I'm here.
Yeah.
Hey, I'm still working.
And we employ lots of people and provide lots of productivity and actually things that we need. But, it is interesting to see this in the sense that we are seeing more of that social push from government. I would expect more of this from the Treasury. I mean, we've seen this before.
I understand that from the fiscal side. I mean,
yeah.
Depending on which party's in play, it's
the tax subsidies, things of that nature. I mean,
when it
that's
comes
pretty
out
common.
of the Fed with their very narrow mandates that they push and pull, this is where I don't understand how they're supposed to foster those businesses. That's really consumer demand and how dollars are supposed to channel. If the Fed lowers rates and keeps liquidity out there, well, money's going to flow to its highest and best use, depending on how it's channeled. And I don't understand how the Fed's supposed to do that, but it is what it is. I'm just here for the ride, man. I have no clue. Hey, speaking of rides, tomorrow morning, we are going to do our Candid Coffee from 8 to 9 a.m. This is our hour-long Zoom webinar. I will tell you, when we started this, Danny and I, during the pandemic, it was supposed to be across the breakfast table conversation. It's still that. And yet it's grown in popularity. I'm really happy about that. This is going to be, I have a few tips. I don't know if Danny, if you're taking a look at, but I have a few sort of money tips for the new year. And we also have quite a few questions that have come in. We still have room, obviously, because it's Zoom and it's only an hour out of your day. I promise you'll get something from it. You can register at realinvestmentadvice.com. Now, we're going to have a lot of other stuff coming up in February. We're going to have a lunch and learn Zoom. I think on Social Security is what we're working on. We're trying to do another right lane class in person, obviously with all the variants that are scaring everybody away. We don't know, but we're thinking that this new variant is probably going to pass pretty quickly. Maybe by the end of February, we'll have one close to the office here. We'll have a retirement right lane class. Now that's our 2 hours plus Danny and I really giving you the soup to nuts on what you need to do to prepare for retirement, or if you're in retirement, how do you make smart decisions? How do we bust the myths that you've been told all these years?
Well, I think that's important to think about when we talk about the markets and all the things. We get a ton of questions each and every day. So all of these events are really tailored around those questions and what
are.
Our clients and people we visit with, things that they feel like are very important and things that we see that maybe we're getting a little bit of misinformation on, and to help point you in that right direction so you guys get a really good understanding of what things really are, from especially on the financial industry and the financial side of things, to help keep money in your pocket, make good, sound decisions. That's what this is all about. Go to realinvestmentadvice.com, sign up right there. Still room for tomorrow. Love to have you guys. Obviously going to be a webinar, so you can do it from your house. Richard will do it from his robe.
We'll have my robe on.
Yep.
It's going to be real good.
You have any new robes? I feel like we've got to change this up a little bit.
Dude, no.
No?
I got to get some new robes, but there's a supply chain shortage.
Okay.
So robes are not, they're on a cargo ship. All the silky robes are on a cargo ship. Everything's on a cargo ship. I couldn't even get broccoli the other day. Empty shelves everywhere. Oh, man. This year's start. I posted a photo of a cow whizzing on a calf, just inadvertently. And it said, well, it looks like
I'm
20.
sure it was inadvertent.
20, well, not. Well, I don't think the cow meant to, do that on the calf. But it was like, this is what 2022 is starting to seem like. You feel like maybe it's not going to get any better. Hey, when we get back, we want to talk about investment advice. Is not financial planning. It could be part of it. But why is it always the whole thing, especially depending upon where you go for financial help? We get back here on Financial Fitness Friday, The Real Investment Show. We'll be right back.
Investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Don't let 2022 be a repeat of the past year. Join Danny Ratliff and Richard Rosso for their essential smart money tips for the new year Candid Coffee event on Saturday, January 15th. You'll learn the landmines to avoid, tax advantages we see, and money tips you need to know in the new year. Register now for our next Candid Coffee at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. Realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back. Some interesting insights from Personal Capital. They're 2022. It's 2022. Wealth and Wellness Index. And I just wonder how you feel about some of these things, whether it's inflation, retirement, overall economic confidence. So here are some of the key findings. Americans' confidence in the economy was stuck at 40% in 2021. It is down from 69% when the pandemic began. And some other studies, obviously, and surveys, it's even lower. Expense to income ration is a top concern for Americans. 37% saying they couldn't handle, listen to this, Danny, an unforeseen $100 expense without worry. 47% saying they couldn't handle a $500 expense without worry. We're down to 37% people could not handle $100 of expense without worry. Surveyed Americans now say they need to be making $122,000 a year to feel financially healthy. That's nearly double the national average. The inflationary environment obviously is having some major repercussions to people's psyches. majority, also this great resignation, right? This great resignation, a majority, 77% of those surveyed considered or are considering leaving their jobs to find higher pay. And paying off debt, here are some of the financial resolutions. And I'm not really a big fan of financial resolutions. I'm a big fan of ongoing, solid fiscally responsible habits. But if you have to look at it this way, paying off debt, 37%, saving for retirement, 36%, beat out losing weight as a New Year's goal. Anything surprising in this wellness index survey to you, Danny?
I don't think so. I mean, I think that is, kind of maybe surprising in the sense that, financial fitness is becoming more important. And, usually everybody looks to lose weight. Look at the gyms. Everything's packed. Regulars are like, they want to stay away right now. Everybody wants to stay away from the gyms because everything gets crazy. Now, give it another, what is it, about a week and a half? I think most resolutions die. But I think this is important to think about, because most people are setting resolutions. They are trying to improve themselves. We get into a new year, you kind of get to put the old behind you and start to build yourself anew to some extent. And I think that the problem that we typically see, Rich, is that we set these lofty goals. And we set this big goal of like, okay, we're going to save X amount. Or we're going to do something that's typically painful.
Very painful. Like even when you diet, right?
Correct. Or I'm going to lose 50 pounds.
Yeah, and I'm going to be on this all celery diet if I could find celery. That is, right? People go all to the extreme when it's really, and we'll talk about this tomorrow. Very small steps that lead to big financial success. I'm not, Dave Ramsey was on Fox the other day. And again, I'm not a big fan of his investment advice, but I am a big fan of some of his financial advice. He just wrote a new book. I want to pick it up just to see, but it's talking about how do you become a millionaire in a very boring way. Yep. That it is boring. There's no, I know Bitcoin and SPACs and NFTs and all this stuff is sexy. It also goes down real sexy too, like 30, 40%. Mm-hmm. But what I'm saying is it's the solid, boring, small steps, right? If I increase I talked to a young man yesterday, he's 25 years old. He goes, Rich, listen, I can only do like 3% in my company retirement plan because I want to do this. He goes, I just don't feel like it's enough. I'm like, listen, it's one brick. It's the brick. It's that first brick you're laying.
That's right.
Right? Don't feel bad about this 3%. Now, we'll try it in about 6 months. We're going to go to 4%. We're going to lay another brick. So he goes, really? It's that easy? I said, you have time on your side. But even people who don't. So it is, like you said, Danny, it's small steps, but everything that Wall Street tries to sell you is this sexy, do this now, this is what's going to make it. You're going to be rich, or if you can't retire unless you have $5 million. Listen, as much as it tries to sell you things, it also tries to discourage you. And that's unfortunate.
Well, I think some of the big keys on this would be is that start small. Every brick builds. Rome wasn't built in a day. Your financial empire won't be either. And so just doing a little bit, had an interesting conversation with the reporter just yesterday. Say they're looking at, want to do an interview on how do subscriptions hurt people financially?
Oh, you mean like the auto?
Oh, yeah.
When you have all this
you start looking
charges?
at these things
and
it's $10 here, $5, $25, and you forget because it's automatically paid.
Death by financial
credit
leakage.
Card.
Yeah.
And so we were talking about this. So look, most people's financial plans or their retirement dreams, they're not just one big mistake. Now, those do happen, right? Like where somebody goes and puts everything in one area or does something that, very speculative, that can, you can see the house ruined. But most of it's death by 1,000 cuts. Mm-hmm. So it's all these little things. But it also works in reverse. We're so good about telling people, hey, pay yourself first. Set it up on autopilot. Mm-hmm. Do one little thing, just like you were talking about. That 3% in the 401k is going to add up. Next year, you increase it. You start building that savings, that emergency reserve. All of these things are going to help solidify that. But on the other end, it does the exact same thing. So we have to be extremely cautious in this environment that we're in, where it's so easy to get on something. I made a mistake. I wanted to watch something a while back, and had to have ESPN Plus.
Right, so you sign up,
So I signed up.
and they go, okay, it's only like $2.99 a month until.
Correct. And then I was like,
forget.
I'm going to cancel it anyways.
Right.
And then I realized I got an email from like, what the heck? I didn't cancel that.
Yep.
So it happens.
It's
I mean,
happened to me.
happens to anybody.
It happens to me, and then I got to go in there, right?
Yep.
That's why I am a big fan of, and that's why it's called. Oh, I'm going to get my credit card statement. I don't get it in paper, right? It's just that it's available to you online, but I will go over it every month. The credit card that I mostly use and pay off every month, right?
Correct.
I will go through it. Now, what's very cool about, say, I use Discover for cash back, but what's very cool is they'll say, listen, you've got this recurring charge, and it's sort of out of the ordinary. Like, what I'm noticing is credit card companies are now getting more proactive to ping you. And I went, oh, wait a minute. Wow, I got to cancel that. So in some ways, that's a pretty cool feature, right? It's a push technology for you to go ahead and cut some of this. But yeah, listen, they know what they're doing, right? When Amazon has you sign up for an ongoing program, Amazon Music or Apple Music, or this ongoing revenue stream.
Oh, it's genius. I mean, they've created their own annuity. But, we tell people often, look, over time, you're not going to miss this.
Right.
You're going to be okay. You're going to figure this out. I know it's going to hurt that first time you do it, but it becomes pretty normal. Well, guess what? That happens on the other end as well.
So you know what I'm doing now?
What
in my little budget book?
Yeah.
Like I just signed up for Paramount Plus because I love 1883. If anybody hasn't watched it, Brent and I have been onto it. You would like it, Danny. I mean, when you have a free minute to breathe.
Yeah.
But it's like $4.99 a month for X amount of months, and then it goes up. But I wrote in my book, this is the date that I subscribe to Paramount Plus. So once 1883 is over, or I don't want anything, I know I'm going to go in and cancel it.
Well,
right?
but
So I'm trying
is,
to actually put pen to paper now with all of these auto subscriptions.
I think that's
I know.
good, but take one step further. Go put it in your phone. Go put it on the calendar, right? Put on Outlook to give you a reminder. Okay, this is the date I have to cancel this by.
Yeah, I don't know. For me, it's the writing in the book works better than the phone, but a lot of people, but that is a good way today to put in a note, right? And then put an ongoing, every 6 months or so to review that charge. I like that idea a lot.
Well, and the problem with the book, and I like the books as well. I'm the same way. I like to write, keep an old school calendar that way, but still keep one electronically, maybe a little redundant. But for some reason, from a task perspective, I feel a lot better when I can check things off.
Yeah, I understand.
But the issue is, how often do you go back and review that? If you're 6 pages further in your book, you may not go back and see that.
That darn book goes at me everywhere.
Oh, I know.
But I understand what you mean.
You ever want to mess with Rich? Take his book.
Yeah. Take my little red book. You can have the little black book. I don't need that one anymore. Brent's like, no, please. So, couple of things. When we do Retirement Right Lane class, we talk about one point when it comes to financial plans. In general, for most brokerage firms, they are what we call loss leaders. It's a guise. It's a mask to say that we are financial planners, and we've heard that that's good for you, so we're going to do it. And ultimately, it's to sell something to you. But it's under this wrapping, as opposed to the plan being the product and the plan being the most important thing. The product or the end result is sometimes more important. This is a very major difference between investment advice and financial planning. There's a lot of word soup that goes onto business cards in the financial industry. I'm a financial consultant. Oh, well, right away you're thinking, well, it could be portfolio-based or investment-based. But that's such a limiting issue, right?
Wait a second. All you sell is annuities. Or, that's...
Those are financial, Danny.
Well, that's
but that is not financial advice. That is not holistic planning or guidance on all aspects of your financial life. Now, you might feel okay to call somebody that is working in that arena, but I think there are a lot of financial professionals that present themselves as holistic advice givers, and it's ultimately to sell a product. Yeah. Listen, we've been there. We've been in the brokerage industry. We know how it works.
Yep.
I mean, we tried to do, I know you and I really tried to do it in a fiduciary manner, which was sort of like oil and water on the brokerage industry because they don't really like the fiduciary side very much unless you're cordoned off into it.
Correct. But the important thing here to remember is that you're working with an institution. And so how's that institution set up? Who's it designed to help? Are they a true fiduciary? Or are they there for a product and for the organization?
Yeah, we get back. We're going to continue to talk about this and have some ideas for you here on Financial Fitness Friday. Stay tuned.
Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Don't let 2022 be a repeat of the past year. Join Danny Ratliff and Richard Rosso for their essential smart money tips for the new year Candid Coffee event on Saturday, January 15th. You'll learn the landmines to avoid, tax advantages we see, and money tips you need to know in the new year. Register now for our next Candid Coffee at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. Realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
My wife had a craving for peanut butter and jelly while we were on our trip. And so if you bought peanut butter lately, it's freaking expensive. It's like $900 for a jar of peanut butter. Okay, not quite that much, but it was like $875. It was in the ballpark. She makes like one peanut butter sandwich out of the entire jar of peanut butter. And so I threw it in her suitcase just for fun on the way home.
The Real Investment Show podcast.
Watched her suitcase get searched at the airport.
At realinvestmentadvice.com.
She didn't speak to me for the whole way home.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
Join Danny Ratliff and Richard Rosso for their essential smart money tips for the new year Candid Coffee event on Saturday, January 15th. You'll learn the landmines to avoid and money tips you need to know in the new year. Register now for our next Candid Coffee at realinvestmentadvice.com with Ratliff and Rosso. Realinvestmentadvice.com.
You're listening to The Real Investment Show.
And we're back. You know, there's really no regulation or any kind of rules or guidebooks or whatever on this term investment advisor versus financial planner. I mean, Anybody can really hang out that shingle. So unfortunately, you have to do your own homework. And I think some of those times you do it, like Danny said, obviously if the firm that you're working with or the individual is fiduciary, that can give you some idea that they do undertake investment, full holistic financial planning advice. You got to ask the right questions. You got to be a responsible consumer. We have a financial survival guide, for example, that will get whoever you're working with squirming or interviewing squirming with some of the questions, whether it's the types of books they read, what kind of continuing education do they undertake, really very important stuff that helps you to understand that this person is there for holistic financial advice. Listen, there's nothing wrong with getting investment advice. If you know you need life insurance or you know you need something, you go to the people that you feel are well equipped. I just don't know how you purchase some of these things without really doing some form of financial planning to understand how much I need. Right, Danny? I mean, how would I know how much life insurance or long-term care insurance or disability income insurance I need? I just can't go buy this. I need to know, well, I mean, I can overinsure myself. I can pay more in premiums. That, again, everybody has this know your client. I need to know your tax, your tax situation. I need to know how much risk you're willing to take and all that, but that's still not giving me enough information. Well, no, Danny, you had 3 kids. You need like $7 million in life insurance. Well, how'd you get that number? You didn't even ask me if I have life insurance at work, how much money I have saved, nothing like this. Yeah, I just don't know how you do it.
Well, there's been so many that these rules of thumb has been the industry norm for so long, and it's kind of been where everything's been segmented. And so, you need insurance? Well, you go over here, you take it off the shelf, and here's what you get, Rich. And, Danny, you need this, here's what, that's the problem with, I think, some of the way that these things are set up. But then not only that, you may have to, what makes it more difficult is that many times these people are really beholden to the company and not to you. And so they have sales goals, things that they must do. And look, nothing wrong with that, right? Everybody needs to make a living, and that's okay. But just to be aware and understand, how do you get to this number? And I think that's an important question for anybody to ask, especially with insurance, but really with any of these things. Why did you choose this type of allocation, or why did you choose these investments? We can go on down the line here, but at the end of the day, we have to be very cautious because whose interest is at heart here, and how are these people paid? I think is really important. So, like we've looked to diversify amongst our business, but trying to keep everything always independent, meaning that we don't have ties to a mutual fund, a money manager. It's strictly to our clients, and we are paid that way.
Right.
It's very intentional, so that if we make a trade, it is with the best interest of heart of our clients. It's going to be, hey, it's because it's going to protect or it's going to grow funds. And that's it. We're not compensated for trading.
Now, I do know salespeople who do have what I call a fiduciary heart. They do approach their business, and they've been in business a long time, and it's just their ethics, right? They're going to do more due diligence to offer you insurance or an annuity. There are many of those people out there. They are professionals, so we're not downplaying how good those people could be. We know a lot of them that are very good at what they do, whether it's positioning reverse mortgages or whatever it is. They are pros, and they want to do the right thing for you, and that's just because that's their code, and that's great. Just like any other business. But you need to know the difference when you sit with someone and they say they're a financial planner. What exactly does that mean? What's the scope of the services they offer? And they go, well, we'll help you we'll help you get your portfolio in order. Oh, okay. That's one slice of the pie. That is not the full pie. Everybody loves that part of the pie, though, Danny, right? Because even Lance, right? Oh, planning, it's so boring. But nothing else, it's like the engine. Like everybody wants to talk about one part of the engine, and that's the portfolio, because that's the fun stuff. I tell people all the time, listen, we get down to the portfolio stuff and the financial, that kind of advice. That's fun for me. That's the fun stuff. But before we get there, I'm working with a young woman right now who needed to get a tax person, organize her business structure. She hadn't met with a tax accountant. She hadn't paid taxes in a couple of years, and she's asking me about crypto. And I'm like, listen, we're so far from this discussion about investments or so-called investments. We got to get all this other stuff in order, including your emergency reserve, right? Your financial vulnerability cushion.
That's the hard part,
It's
though.
10 weeks later, and she came to me with all the checklists before we got to the investments, right? We ate all the vegetables and everything before we get dessert. But that's the hard part, right? That's the most important part, not whether I should own stock A or stock B.
Yeah.
I'm not saying it isn't important, but listen, I'm not putting that cart before the horse. It just doesn't work.
Well, but you see this often where somebody who they come into money, they make money, they get a bonus. They don't have the rest of the house in order, but they'll want to do that. Hey, I'm going to go invest in crypto. I'm going to go invest in this stock. But that's not the fun part.
It's not. So say you get a bonus. Say you get a $10,000 bonus or a $5,000 bonus. If you have a financial plan and you know your cash flow, you're very intimate with your household cash flow, you know how that money should be guided. It's most likely not going to be for immediate gratification. It's going to be for something delayed, something that you need, a goal that you need to complete. Now, that doesn't mean you can't take a couple of $100, go out for dinner, have fun with some of it. It's not all eat your vegetables. But if I don't have a strategy, then I might, gosh knows what I would spend that $5,000 on, right, Danny?
That's right.
Because it could be all immediate. We just read that survey from Personal Capital about how people can't raise $100 in case of emergency. We also know, like the bank rate study, right? Only 39% of Americans say they could cover an unexpected expense of $1,000. Now what we have going on is the personal savings rate. That was 13.1% in 2020 because nobody was doing anything. That's retreated to 6.9% as of September 2021. Then now we have real wages too. For inflation have declined by a little over 1%. So the overall state of Americans is cash poor. And I don't care how young you are, how old you are. A plan and a financial plan that's comprehensive and also understanding your cash flow statement, not your net worth, but your cash flow, where every dollar flows in your household, is going to help you make better decisions going forward. I mean, I cannot believe that I'm still like reeling about the $100. I mean, you could spend $100 today and just on, I mean, yeah, a tank of gas.
Well, and really, that's downright
That's
sad.
true. I have seen some people say, here's you'll see on Facebook or people taking pictures of the $95 to fill my gas tank.
It's crazy.
Yeah.
But it is sad. I mean, it shows the state of the economy that maybe we're not seeing when you turn on the news. We keep hearing about how everybody's so much better off after the pandemic, but is that true? I mean, we saw all this stimulus, all the child tax credit checks, all these things that are going away. Was that money actually saved, or was it spent on items, on things?
Well, there was a very good article. I saved it in the Wall Street Journal. There were some families, actually made me feel good. There were some families that did the right thing with this money coming in from the earned income tax credit. And some of the money, in other words, they paid down debt. They were able to fund a Roth. In other words, they actually used the money to bolster their household. So this Wall Street Journal article is quite long, by the way, went through several families that actually spent the money in a very, very conscientious and fiscally responsible way. So that sort of made me feel good. But you're right. But the whole gist of the article too, Danny, was now this is gone.
So now what?
Now what?
Well, that's been our concerns about the economy in general. Do we still see that spending? Is that still going to be that inflationary push without those funds being there? But take it back now. Are households actually that much better off? And there's going to be those stories of people doing good. Look, there's going to be people who do bad with it, right? And I think we're probably somewhere in the middle. But that survey would suggest that it's not looking too bright.
No, and that's where you're going to have to be concerned about interest rates going higher. You're going and what wages, real wages going down. So inflation's sticking around longer. We call it permatory. It's not transitory. It's not permanent. There's something in between there that's sort of vicious. One of the issues I always worry about here is some form of stagflation light that I wrote about last year, where we do get sluggish growth because of what you're mentioning, Danny, but inflation stays sustainably higher. And then you don't know how quick the Fed's going to move because the Fed's connected to the market, and any real disruption in the market. I mean, I don't want to be in the Fed shoes, especially now I have to worry about climate change. I don't even know how.
Heck no.
We're not going back into that circle because I can't get off that road in my head. I don't have no idea what they're supposed to do about that. When we get back, hey, you want double-digit returns? This is going to sound weird. Hold cash. We'll be right back to discuss.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Don't let 2022 be a repeat of the past year. Join Danny Ratliff and Richard Rosso for their essential smart money tips for the new year Candid Coffee event on Saturday, January 15th. You'll learn the landmines to avoid, tax advantages we see, and money tips you need to know in the new year. Register now for our next Candid Coffee at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. realinvestmentadvice.com. Click on the insurance tab.
What worries you about your money? Enhance your financial success with RIA Advisors' free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And we're back. Again, tomorrow, Candid Coffee, smart money tips for 2022. Hey, we hope you come on just to share some of your own. You said it earlier in the show, Danny. You know, maybe we help, I know we help clients, and I hope we help radio people that listen to us and all the writings we do. But boy, we do learn a lot from our clients and people on the other side of the radio and YouTube. You know, everybody's going through these experiences, and they mean a lot to us because that also helps us with material. It helps us to understand what's going on in your household. And Candid Coffee is definitely have gotten us closer to that as well.
Correct.
So that's we hope you can join us tomorrow from 8 to 9 a.m. Sign up at realinvestmentadvice.com. Send in a question, right? It's an hour long, but I know we'll have questions and other things. I have a few tips. We'll get through those in about 15 minutes. The rest of the time is really, it's your it's all about you, your questions. We want to answer them for you. So when people hold cash, it's a conscious trade-off, right? You have cash. They're so diverse as far as the reasons you have to hold it. For some, it's to smooth out portfolio volatility, dry powder, right? I'll have future opportunities I want to make to take. I have an example of a friend of mine who has been keeping cash because he does want to buy crypto, and he's been waiting for a correction. And everybody's asked me if it's the right time to buy and go, your guess is as good as mine. I have no way to analyze it. If good luck, right? Yeah. But Wall Street always wants to take your cash, right? If you think about maintaining a cash position, it is the ultimate protection against unforeseen events. And my gosh, we've had quite a few of those over the last decade. But Wall Street wants to grab every dollar we possess, and they employ all these marketing departments to pick your pockets. Even better, they're persuasive enough for us to pick our own pockets, right? Because they have these scary stories, cash versus the inflation monster, especially today. And yes, if you're going to sit in cash for 20 years, you're absolutely going to succumb to the inflation beast. But what arena are you fighting these cash battles? Where do you need cash to flow to? Cash can rise victorious for you. So remember, I think people put up, we call it mental accounting, Danny, right? We have people that say, I've got this account for this account for that. But keep in mind, cash flows through every financial category. I have someone I talked to, just 6 months ago. He says, I have $10,000 in credit card debt. I'm like, oh my gosh, 16, 17% in credit card debt. And I'm like, there's no way he's got a cash reserve, right? Because that's why he's doing it. He goes, yeah, and I got $30,000 in cash I got to do something with. I'm like, wait a minute. Well, no, that's my emergency reserve. I said, listen, take $10,000 and pay off the credit cards. Yeah. Oh, yeah. All right. It's a guaranteed 17% return. Now, it's rudimentary when you think about it, but our minds compartmentalize these things and create these walls in our head where we can't cross these boundaries. And it's very simple when you think about doing that, because cash is such an emotional Snuggie. I don't want to part with it, even though I'm paying more in interest on this side.
Correct. Yeah, and that's a difficult thing, I think, for most people to kind of overcome that hurdle. That is one. And, the other aspect of this is that many people, once they put cash, in that savings account, they like to see it there. They have a very difficult time moving back into markets, moving into something that's going to have some type of interest or something that's going to pay you. And so I think that, what everyone should do is understand your finances. And I'm not going to go as far as saying create a budget, because I know most people won't do it. They don't want to do it. That's the number one thing. We do a financial plan. If somebody gets hung up on paperwork, they're like, I'm not doing a budget. I don't want to deal with that. But
I know it really is like eat your broccoli. If you can find it. You can find kale, though. But
4-letter word. So, what I think that most people need to understand is that cash serves that purpose for a handful of reasons. And so one can be, number one, you need the emergency reserve. Number two, you need a financial vulnerability cushion that just goes a little bit above and beyond. And then we want to have cash for those short-term needs. So if you have something you're looking to purchase within the next year or two, or, you have a big expense coming up, cash would be great for that purpose, because we don't want to invest money. And one thing always, when we were having these discussions is, okay, great. So you have $100,000 that's earmarked for XYZ. Mm-hmm. If it goes up 10%, that's awesome, right? But what if it goes down 10%? How do you feel about that? Is that going to be, is that detrimental? Well, yeah, because now I got to pull money from somewhere else. You may have to sell it with another asset that's going up and down. It can be problematic. So what I always encourage people to do is that write it down, write down your goals, what the objective is for all of this cash. Now, anything above and beyond, we could say, hey, I want to keep cash because I believe the market's going to crash, or I'm looking for a rental property, or whatever it may be. I'm starting a business. Yep. Great. There's going to be times that you will likely have a lot more in cash than other times, because you're going to take advantage. And the beautiful thing about that cash is that it's going to give you opportunity, not only the security. But I think people get too hung up on the security when it comes to cash, than actually using it as a tool.
Right, using it almost in that way. I think it also goes to the fact that everybody's got a definition for short-term, long-term.
Correct.
like you and I right away, if I say that to you, what goes on in your mind and in my mind are probably similar. But someone else might have a totally different definition because we don't want to put money into the market. If you're telling me you need, like, have people go, well, it's long term. I that's why I want to put it into my investments. I'm like, well, what does long term mean? Oh, 3 months. I'm like, no,
that's not long.
That's not going to work.
Well, even a year is not long.
No, exactly. But we have to coordinate the definitions of what that means. Lance has great perspectives and charts on cash, but he talks about this, that having cash as an asset class, yes, it can lose purchasing power due to inflation, but to invest at lower valuations, it produced substantial outperformance over waiting for previously destroyed investment capital to recover. Right? Now, if someone's burying cash in their backyard or putting in their walls, why can't I ever find one of those homes when they're remodeling and they take the wall down, it's full of cash? I think you got to live in like Chicago.
Or just the Summit.
Like, what? With a church?
Yeah.
Lakewood? Yeah. I wonder whatever happened to that story.
I don't know. It disappeared.
I never heard anything
Kinda like
more
the
about it. Yeah.
No, how bizarre is that?
Mrs. Olstein's got a new car. No. But having cash allows you to pounce on opportunities, but you got to release it, right? You got to know, are you smart and patient enough? I worked with one client through the financial crisis, and he had, he's long gone from this earth. He was a great guy. He had $500,000 sitting in cash. And he goes, Rich, what should I do with it? I said, why don't you get on a plane to Florida right now? Because he loves Florida. You go and look at Naples and look at Fort Myers, because I was looking at properties and how, distressed and beautiful properties off the water. I said, why don't you go ahead and you always wanted to own real estate. You have enough in markets and all that, but you always wanted to do this. Well, he did. And he had that cash as such leverage. He was able to purchase properties for 50, 60 cents on the dollar, because he held this cash for like 7 years, waited for this opportunity. So those houses, those townhomes are providing robust rental income for his kids, and they have appreciated tremendously since 2010.
Yeah.
But you have to have the discipline.
That's the tough part. I mean, think about this. 7 years is a real long time. At some point, you can get very comfortable with that, or just say, you know what, I can't keep waiting.
At the bit, right? Yeah,
I'm going to go ahead and just put the money in and go ahead and spend it.
Yep.
And that's the most difficult part about cash, is that actually waiting for that opportunity. Look, there will be another opportunity. It's like a lot of clients want to buy real estate right now, and
everything's
it is so difficult because not to mention that the market's saturated with people who are doing this, who want to buy homes, flip them, or turn them into rental properties. So you get, if you own a home, you're probably getting text messages, phone calls on a daily basis by somebody wanting to buy it.
Yes.
Now, not for a good price, mind you, but they're looking for an opportunity.
I have to tell you, I've been getting some really good prices that I almost have to tell someone, are you nuts? But I don't want to go anywhere right now, because I agree with you. There are cycles to things. Mm-hmm. And if I'm patient enough to wait, because I would like to move, if I'm patient enough, even if it's 2 years, I'm patient. Like, I don't expect a crash in real estate, because I don't think the origin of the mortgages are not what they were. But you are going to see a shift.
Yeah.
It happens all the time. The one cool thing about the market is you always get another chance, but do you have the guts when those opportunities arise to take it?
Well, because think about this, when those opportunities do come, it's not going to be because everything's hunky-dory.
That's right.
That's
right.
There's going to be some trouble in the streets. And
that's when you should be buying, right?
Correct. But that's the most difficult time to buy.
Right. And that cash almost turns into cement in your head. Yeah. It's not fungible. It's like I got it in a vault. So how am I going to, I even telling this gentleman who was waiting for 7 years, he goes, oh man, I don't know. That's risky. I said, you've been waiting all this time to find the right real estate. And now you've got this. Yeah, could it go down more? But you're paying cash. You have leverage. That's right. You have leverage. So Mark Cuban says that negotiating with cash is a far better way to get a return on your investment. When you have cash, you have leverage. especially when, like you said, Danny, when there's blood in the streets and you're going to come in to buy. It just takes a lot. So cash can give you double-digit returns if you have the patience and the guts to release it. That's all we got for today. Hope you have a great weekend. Join us tomorrow for Candid Coffee. Lance, back on Monday. He did not bother us today on YouTube. Where are you, Lance? Hope you all have a great weekend, everyone. Take care. Thanks for being with us.